Good day, traders. Today we'll take a look at soybean futures. Ticker is going to be ZS. Currently the front month is the November contract, which is represented by the X, but we may take a look at the Jan contract to allow us more time for this potential setup, which is going to be F. So F is January. So you want to use F as the symbol for the January contract, ZSF. But we're looking at a very high probability, reliable seasonal trade based on at least 7 years of historical data. Calls for a short on or around December 7th. Yes, I realize we are not even into the month of November. However, looking at daily, weekly, and monthly charts leads us to go ahead and start cluing in and putting this particular market on our radar. So we have a trade that has been profitable 86% of the time over the last 7 years. Average trade days about 25, 30 days. Average profit around $1,500 per contract. You see, we had fairly consistent performance year over year dating back to 2012, with the exception of this trade last year, which incurred a fairly steep loss. But that's going to happen in the markets. Nothing is set in stone. So while we do look for consistent setups year over year, we go into that knowing that there will be anomalies and other events going on that could affect the seasonality nature of that particular trade. So we don't let that bother us too much. Now, if we start seeing this year after year after year, then we likely will not even get this particular trade setup on our radar through our smart seasonal scanner, because the odds then are not skewed in our favor. And obviously, as traders, we want to keep the odds in our favor. So let's take a look at this particular seasonal opportunity, calling for a short right around the month of December. So here we are in late October, and then doing kind of a top-down analysis, we're looking at a monthly chart. So what we like to do is always look at the larger time frames. The larger time frames govern the lower time frames. It's always good to conduct your analysis by starting on the higher time frames and then drilling down into the lower time frames to fine-tune your entries. So looking here on a monthly chart, you see what we are pushing into monthly resistance, an area of potential supply imbalance, and we want to see how we react here in this 10.60 to 11 cent range. We do or would expect the market to pause, as we did here back in March of 18, and also going back several other months and years. But you will see that if we do clear this hurdle, we have the potential for another up leg up here into the 11.70, 12 cent range. Let's take a look at a weekly chart. And on a weekly chart, we do have similar zones here within the monthly range, which we are pushing into. So are now approaching our third week in a row of pushing into this area, and we'll want to see how we close the end of the week. Do we close lower, putting in a bearish reversal candle, or do we remain relatively unchanged, keeping inside this large bullish candle here for the week of 9/28, or do the buyers or the bulls step in with strength and push us out and break us up and over this resistance to take us to the potential next leg higher? If we go to the daily chart, see we are getting a little bit weaker. You can see that looks like there is some potential distribution going on. If we go down to the 4 hour, you can see that we don't look as strong as we do on the daily, weekly, and monthly. So this will be interesting to see. Do we take out these highs, or do we start to continue weakening? If we go back to the daily chart, one simple method of analysis that I like to use is a simple trend line. So we want to connect at a minimum of 3 higher lows, and this gives us a little bit of guidance as to a potential change in overall trend direction. So what I'm looking for here is areas of confluence to take the trade. So what we have going on is one, potential divergence. We have a high and then a higher high, and a high on our RSI and a lower high on the RSI, thus creating our divergence pattern. Now, with this divergence pattern, one could simply take shorts, but I find that the higher probability scenario is to wait for a trend line break, which you can see has kept us out from getting short this time. Secondly, we have a potential 1, 2, 3 top. Now, if these highs take out the highs made on, looks like October 9th, that will negate or void the 1, 2, 3 top pattern, and we simply start to count over again. So we have a potential 1, 2, 3 top here, which would also coincide with a trend line break, but the market rose up, took out these highs. We start to count over 1, 2, 3. Looking again, the number 2 break would have been a trend line break, but right now we are looking to potentially take out these highs. So we'll wait and watch and see what happens. Or we also could get a head and shoulders top here at this key area of resistance. That would give us a left shoulder, a head, or if the market pulls down, retraces higher but fails to take out these highs, and we could consider taking shorts below that neckline. So I would keep soybeans on your radar. We have a very high probability trade. We as traders know nothing occurs on exact dates most of the time, and we as traders are all different. So whether you are fine-tuning your entry a little bit more by going down to the lower time frames, or if you are watching and managing your trade larger time frames such as the daily and weekly, will all have different entry dates, entry and exit points. So if you have any questions about this analysis or methodology that we utilize over and over again, feel free to reach us at support@seasonalswingtrader. Have a great week. Good luck in trading, and we'll see you on the next update.